Hi, this is Professor Bolt, responding to the mid-semester course evaluation for TAKS 2019. Many students indicated that they really wanted some help with the preparation of tax forms, which is the compliance side of the course. And so as a result of that request, I am taking a few minutes this morning. Won't be the most professional. I'm not going to rehearse. It'll be a little bit in the rough, but this is Comprehensive Problem 44 for Chapter 8, and I'm going to go through the solutions that I have done on ProSystem-FX. So we start with Form 1040. Hopefully you can follow as I go through and do some really subtle highlights. Notice we've got the name of the taxpayer and their spouse. We've indicated that this individual is married, filing joint, and this first page is really nothing more than information. The children are listed, the social security numbers if provided. Sometimes I make those up. So this is an information page. I will stop for a minute and remind you that if it's a professional preparer, a paid preparer right here, the preparer, other than the taxpayer, commits that this tax return is based on everything for which they have knowledge and that they haven't omitted anything that they are aware of. If the taxpayer who is paying a paid preparer fails to tell the paid preparer about something, then the paid preparer is not liable. I'm going to go forward then to page 2 for Andy and Marcia's tax return. So we're going to start with wages. These are the W-2 amounts, and yes, if you looked at the problem on page 826, it says that Andy makes $50,000 and that Marcia makes $42,000. So that's where we came up with the $92,000. Again, hopefully, as you're watching this video, you can see me highlight. They had dividends. In this scenario, it was just ordinary dividends. If they were qualified dividends, as we have already studied, they would have a reduced tax rate. But we just have general ordinary dividends, which are added together on lines 1 through 5. The total put on line 6 of the fact that their total income is $92,950. Notice this little note right here. If there was something from Schedule 1, line 22, it would go right here. Whoops. So let me get rid of that. So for right now, what we've got is 0. So I'm going to pause here, something that's not on this return, but let's look at Schedule 1, line 22. And it's over here. Schedule 1 is additional income and adjustments to income. This is all of your adjustments for AGI, above the line, as we like to call it. And so if there was income, for example, capital gains from the sale of stock, other types of gains, maybe from a depreciable asset, alimony, business income, this is Schedule C. If the taxpayer had business income, notice it says 0 right here. If there was unemployment compensation, or they had rental real estate, or a need to attach Schedule E or F, or maybe they had gambling winnings. I have to tell you, I helped someone do a tax return yesterday where they had won $10,000 from the lottery, and it went in this place right here that says list and type amount. So all of this is combined, goes total to line 22, and then from line 22, as you see, it says if you don't have any adjustments, enter here and include on Form 1040, line 6. So in Andy and Marcia's case, Form 1040, line 6 has 0, as we can see right here. But other cases, you might have an amount to enter there. And if that were the case, a little quirky, a little cumbersome to me, you would add up lines 1, 2, 3, 4, 5, and then that quirky piece that you see in a box right here, which I don't understand. But it's the way the forms were developed for this year. Okay, let's move forward with this with this return, and we show something else that to me is a bit hard for students to understand. That is that here's adjusted gross income, and typically it's going to be what we've calculated on line 6. What we've calculated on line 6 up here. But if it says you have anything on Schedule 1, line 36, then it's subtracted. So in fact, Andy and Marcia had an IRA right here of $2,000, and that is an adjustment to income, meaning it was subtracted. And so that $2,000 that we have here is subtracted without even being included on the form here, and now we have $90,950. So I think this is probably the hardest part for students to understand, is lines 1, 2B, 3B, 4B, and 5B, plus whatever amount might occur here from Schedule 1, line 22, adds up to this. Then, to calculate the $90,950, we have to come down here and see that, yes, in fact, there's $2,000 right here from an IRA deduction. You know, there could be others. If you were preparing a return for an individual who had moving expenses and they were in the armed forces, or you had an individual that was self-employed, half of their self-employment tax would be taken here, or if they had paid out deductible alimony, it might go here. Self-employed health insurance is a possibility that might be deducted on line 29. However, for Andy and Marcia, there's $2,000 right here. It is subtracted, and oddly enough to me, $92,950 minus the $2,000 on Schedule 1 gives us $90,950, and that is our adjusted gross income. Okay. Next, standard deductions or itemized deductions. As you can see from the form, we're given the information if the taxpayer takes the standard deduction. And looking over here, this was a married filing joint. It would have been $24,000 had this couple not taken itemized deductions. But you were doing Chapter 8, which is about itemized deductions. So you had to go complete this form. We'll talk about it in a few minutes. You came up with total itemized deductions of $27,754. And as you see here, also enter on Form 1040, line 8. That's what we did, was we carried this number forward. So let's go back. And it goes here. 27,754 ends up right here. So those are our itemized deductions from Schedule A, as the instructions say. Again, it takes a great deal of patience to just read line by line. Okay, next, line 9 is our QBI, that new quirky thing that was set up by Congress because they felt it was unfair that corporations got reduced tax, but that small businesses did not get any benefit from the preferential tax treatment for big business. So this QBI was added here, and we've done one for a homework problem. I will doubtfully have anything on the final exam related to this, but do understand that if it's a qualified business income, there are schedules that you can fill out. Notice all they say is see instructions. You would go back and read those instructions to see if you have a qualified business income, then you might be able to take a 20% deduction. And the instructions, it's truly a matter of Googling irs.gov. Make sure you use the IRS instructions. Reading what's required on line 9 for QBI. Generally, it's 20% of qualified business income, and that's the amount that's put there. It is a from AGI deduction. So what we have here is our AGI, and this is a from AGI deduction. There are none on line 9. So when we subtract $90,950, when we subtract $27,754 from $90,950, we get $63,196, and this is our taxable income. Using whichever we want to, the tax tables, which you can find online, or the tax rate schedules in the outside of your book, which would show that this taxpayer, as a married taxpayer, is in the 12% bracket. Their taxable income is over $19,050, but under $77,400. Then when you did the calculation, the taxpayer pays $1,905 plus 12% of the amount over $19,050. That calculation came up to $7,200, which is listed here. We didn't have any child credit because the problem told you to ignore that. There again, we bring down the total because there are no other taxes that would come from this Schedule 4. And so we find that we have $7,200 worth of total tax. According to the problem, we have $9,000 in federal income tax withheld, which gives us an overpayment of $1,800, and we want it to be refunded to us, so that $1,800 comes back. So this is the basics, 1040, page 1 and 2. Okay, we've already talked about Schedule 1, which is additions and subtractions for AGI. So let's move forward and look at, let me just show you this real quickly. This is what, a pause for a minute, just to show you that if we had calculated for Andy and Marcia the fact that they had 2 dependents, we would have shown that those 2 dependents were allowed that $4,000 child credit, but the problem told you to ignore it. So we'll move forward and look at itemized deductions. The taxpayer's name, up here. And $11,775. Now notice it says here, see Statement 3, when you use professional software, generally you list specifically the things. For example, the problem on page 826 says that they had medical expenses for doctors, premiums for health insurance, and prescription drugs and medicine, eyeglasses. You would have shown those listed individually just to help the tax preparer, sometimes to give the IRS the information. This part can be tricky for students. Right here is the amount from 1040, line 7. So if we scroll back up to line 1040, to Form 1040, line 7, we see that here is the adjusted gross income. That amount is used to limit the amount of medical deductions that this taxpayer is allowed, because they can only take 7.5% of their adjusted gross income, which means that they're only allowed $49.54. So again, total medical expenses, the limit of 7.5% of AGI. This is the deductible amount. Taxes. This was a little unique for 2018. This is the state taxes withheld. If you look at the return, they talk about state income taxes of $5,800 in the problem. This is their real estate taxes. They showed specifically real property taxes on the residents. They would like to take $12,100, but Congress limited it during the year to $10,000, and that's all that you can have in this number right here. Interest was given in the problem of $12,800, interest on the mortgage for the house that they had. We talked about points in class. I hope you'll go back and review what I discussed about points, because they're important, and most people don't remember to take that deduction unless they use a paid preparer. There's our 12.8, and we add together. We again come up to the 27,754. That's our itemized deductions. Okay, just want to show you a couple of other things that came through. You did not have to prepare this, but you will for the final exam. So this will also help as a review for the final exam. This is Schedule B. This is a schedule that's been out there for a while, thank goodness. Nothing new about this one. And it's just for interest and dividends, and talks about the listings. Literally, it's the name of who paid interest. And so if you got interest from a company, whether it's your stockbroker or it's your bank, you would put down the name of the payer. It might say Wells Fargo, and you might have the amount listed over, which would be totaled up and entered. As you can see, it says on Form 1040, line 2B. We did, in fact, in this problem, have dividends. They didn't tell us the name of the payer of the dividends, I don't think. Let me look at the problem, 950. Dividends received from domestic corporation. Normally you would have that maybe you owned stock in Walmart, which pays dividends, and so you would have down that the name of the company that paid you the dividends and then the total amount that's taxable. And that would come from a Form 1099 DIV, as you can see over here. And I forgot about, let's go above again. Notice it's a 1099 INT that you would get for interest. So this $950 was entered on line 3B of the 1040, and we did in fact include it on the 1040. I'll go up real fast to show you where it went. It goes here. So let's come back down. You're hearing the clicking of my computer as I've connected my iPad to the computer. Let's see what else I have in here that I need to show you. This is just a summary that comes out with ProSystem FX. Let me show you this one. It's because I used a template for an old problem. This is a sample of a Schedule C that I wanted to take a second to show you because some of you had trouble with this on one of your homework assignments. Notice that they ask you for a little bit of information up front. And then what we have here is literally the income listed in this group. See Part 1? And just plain old sales. Go right here on line 1. Typically, you don't have anything to put on line 2 for returns and allowances, but you know what that is as an accounting major. And you know what line 4 is, cost of goods sold, and how gross profit would be calculated. We're talking about that in 212 right now. Gross income would come here on line 7. Part 2 is expenses. Again, this is really, really easy. It's like doing an income statement in 211. So Part 2 expenses is just a listing of what expenses were related to the revenue. Commissions and fees could be here, or over here you see rent or lease, or if there were supplies. So just a total listing, and you add them all together. They go on this line for total expenses, line 28. And the tentative profit or loss on line 29. I will not give you an exam question about the business use of your home, but if there were one, it goes there. And that is because you're not allowed to take a deduction for home office. It's a little trickier this year anyway, but you can't take one to create a loss. The net profit or loss here on line 31. And if it's a profit, it says it goes on Schedule 1, Form 1040. Let's see if I can get this pointer to drag properly. Schedule 1, Form 1040, line 12. And let's go back, in fact, and see what Schedule 1 looks like. Here we go. Schedule 1, additional income, line 12, business income or loss, and it would go on line 12. Notice in this example we've got a 0. But if we had, in fact, taxable income, then it would be carried forward from here. The dollar amount would be carried forward from here up there. And additionally, it would go to Schedule SE, which I don't have with this tax return. So that concludes what we have. If you want to sign off now, you're good. Just wanted to scroll on down to show you some of the schedules that come with a professional software related to expenses that I didn't really take the time to fill out. And so I hope this helps. Sorry for the less than professional dialogue, but I didn't prepare a script. I hope it's helpful for you as you do your next homework assignment that requires a tax return, and also as you start studying for Exam 3.